for example, if you have a student who's given a $3,500 work study award, as an example, at the beginning of college freshman year,
I don't need this.
that student has the entire year to earn $3,500. Let's say the student works in a part-time job, 6 or 7 hours a week, and by the end of the year has earned $2,500. That money has come to the student throughout the year in paycheck form every week to 2 weeks. At the end of the year, the rest of the money, that other $1,000 that was in that fund, is returned to the main work-study pool. It's not given to the student. So even though the student was saved $3,500 to earn, the student only earns what he or she has worked for throughout the year, and the rest of it is given back essentially to the work-study fund at the end of the year. The other main type of financial aid is student loans, and student loans that come from the federal government or the state government are considered financial aid because they do help pay the college bill, and those loans coming from the state and the federal government have low fixed interest rates. They come with some benefits, and there are a lot of opportunities for students to modify their repayment after graduation. So there's a lot of benefits that come with these loans. They are loans, they have to be repaid, but students are given a lot of opportunity to modify their repayment after graduation so that they don't go into default with those loans. In financial aid, we have two main categories, and the first we call merit-based aid. This is financial aid that's given to a student not based on finances, but based on a student's ability or skill or talent. So this money is given to a student basically in recognition of a student achievement. Students can either apply for merit-based aid, or at some schools, every student is considered for this merit-based aid, and it's also called merit scholarships. So if you have a student applying to college, the best thing to do is to look on the financial aid or admissions website of every college and university and seek out this merit-based aid. Find out if there are separate applications needed, a separate nomination, a separate essay that needs to be written, or if simply every student who applies to that college or university is considered. This merit-based aid may or may not be renewable, meaning a student could receive merit-based aid for only freshman year, and it could be a type of aid that's given to a student for freshman year, understood that it won't repeat for sophomore, junior, and senior year. More common is that a student would receive merit-based aid that can be renewed every year if the student is in school, but the student often has to meet some type of requirement, either a grade requirement or a certain number of hours given for community service or enrolling in a certain major or academic program. Merit-based aid really is simply a recruitment tool used by colleges and universities. They recognize a student with some specific skill or talent, whether it be academic or athletic or artistic, and they offer this money to recruit that student, to entice that student to enroll in that school's freshman class. A lot of colleges and universities offer merit-based aid, but it's not offered at every school. Ivy League schools and very, very top-tier schools across the country don't offer merit-based aid, and that's simply because they don't need to. If you have a student who's gotten into a very, very top-tier school, it's likely that student will attend. It's likely that that school is the student's first choice. So that school doesn't really need to entice that student to attend. But again, merit-based aid is offered at a lot of schools, so best thing to do is to look on the college, university, or university financial aid and admissions websites to find out if there's anything extra that your student needs to do to apply for merit-based aid. The other main category of financial aid is called need-based aid. And need-based aid is the majority of financial aid out there. It is money or aid given based on a family's financial eligibility or need. Basically, a family needs to demonstrate that they need additional funds in order to attend that college or university. The eligibility for this type of aid is determined by a standard formula. All of you will submit financial aid applications, which we'll review, and all of the information that you put on those financial aid applications will be put into one standard formula. That formula will determine how much money your family needs in order to send the student to a college or university. And financial aid offices will then use the outcome from that formula to determine how much financial aid to award to your family. Need-based aid includes, again, most of the financial aid out there, a lot of grants, a lot of loans, and the work-study program. In order to receive need-based aid every year, you will have to complete the financial aid applications every year in most cases, but the student will also have to be making what we call satisfactory academic progress. And this basically means that the student will need to meet a certain grade point average and earn a certain number of credits, take a certain number of credits basically, and pass those classes in order to be considered for need-based aid every year. The financial aid given to students comes from several different sources. The federal government offers a good amount of financial aid to students across the country, and it comes in the form of grants, work study, loans, and tax incentives, basically tax benefits on your federal tax return. There's a great website, studentaid.gov, and it includes all the information that you need to know about federal financial aid. So now or even after you get your financial aid award, you can go to that website and just learn about all of the financial aid that's given from the federal government. States also offer a lot of financial aid. It depends on your state, the type of aid that's given, and how much is given. But in general, states offer grants, scholarships, tuition waivers, and loans. So check with your state government to find out the financial aid that is available. When you submit your financial aid applications, the college and university financial aid office will consider you for all of this financial aid, for the federal aid, for the state aid, and any aid coming from the college and university. So you don't actually have to apply to these different places. By doing the financial aid applications, you'll be applying for all this financial aid. The colleges and the universities are going to offer a good chunk of the financial aid that students receive, and we call that institutional aid. This is money coming directly from the school, from the college or university. They offer a lot of grants and scholarships, and some schools even have their own loan program as well. And then finally, there are other agencies across the country that offer scholarships for students. And if you haven't started looking for scholarships, you should definitely start. I'll have some information about private or outside scholarships in just a minute, but that's a great way as well to help pay those college costs. This is a breakdown of all of the financial aid that was given to undergraduate students in the 2014-15 academic year. This is the latest data that's been collected. The size of each bubble represents the percentage of that total, the $184 billion of financial aid that was given to students in that academic year. You can see that the biggest percentage of financial aid is federal student loans, and I'll speak to these loans in just a few minutes. But these loans are provided by the federal government. They do have to be paid back, but they do offer a lot of benefits, and there's a lot of flexibility when students are repaying these loans after graduation. You can see there are also a lot of gift aid or free money given to students within that $184 billion that was given. A lot of federal grants, 24% of that total is made up of federal grants. Then we have 22% of institutional grants and scholarships. So that's a lot of free money. We also have those federal tax credits, those credits that are on your federal income tax return, private grants, state grants, and then that federal work study program. As I mentioned, there are a lot of private scholarships out there, and they're given to students actually of any age. So if you have a high school senior, would definitely encourage that high school senior to be looking for scholarships. But there are actually a lot of scholarships out there for students all through high school. So even students in 9th and 10th grade can start looking for college scholarships. And there are even some scholarship programs for students even younger than that, students in middle school and even elementary school. So definitely you can do some internet searches for private scholarships. You can specifically start with your high school when looking for private scholarships. Your guidance counselor should have some information. Some guidance counselors have a list on the high school portal or even within the guidance office of different scholarships that students can apply to. Definitely recommend that you just apply for any scholarships, or the student apply for as many scholarships as are applicable to that student. Often a parent's workplace will have a scholarship for sons and daughters of employees. That's a good place to look. Professional associations have scholarships as well. So for example, if you have a student who would like to be a nurse or a doctor or a lawyer, there might be a professional association, either statewide or national, that is made up of that profession that offers scholarships for students. So take a look online at professional associations related to the field that your son or daughter would like to go into, and find out if there are any scholarships available. There are plenty of search databases online where students can easily search for scholarships based on their interests and their skills and their grades. YourPlanForTheFuture.org, which is a free portal, has a scholarship search. Fastweb.com is one of the most well-known scholarship search engines. Good has a great listing of scholarships, and Student Scholarship Search. And these are just some of the many search engines out there. Just a few tips: never, ever, ever pay a fee to apply for a scholarship. There are some sites and some programs out there that require students to pay a fee to give them access to certain scholarships. Those sites and those organizations, for the most part, are requiring a fee and then giving students access to scholarships that are found on all of the free websites as well. So never ever pay a fee. A lot of the time that is a scam in order to apply for a scholarship for college. If a scholarship requires an essay, that scholarship is definitely going to have less applicants, and that's simply because students don't want to write another essay. But if there's a scholarship that has an essay required and the student can take maybe the personal statement from the college application and tweak it just a bit and apply it to that scholarship, that's always a good idea. Even if the student has to write a new essay, if that takes that student an hour and that student is able to win a $1,000 or $2,000 scholarship, that's a pretty good return. So definitely definitely encourage students to apply for scholarships that require an essay. It's helpful to search for scholarships related to a student's interests and activity. So if I am a girl in high school and I play hockey and I'm also Greek and I love cooking, I would search for scholarships with all of those keywords, because there might be something out there that fits me pretty well and that I can apply for. And then last piece of advice, and this comes a lot from admissions counselors who say students need to clean up their online profile. If students have any type of social media account that is public, and a lot of the time they don't even realize that their Twitter feed is public, their Instagram is public, their Facebook page might even be public. Students need to do an internet search of themselves and to see what pops up, because there are plenty of scholarship agencies and admissions offices that are looking at the online profiles of student applicants. So this applies to students applying for scholarships as well as students just applying for college. Make sure that your high school student has a clean online profile. So let's go through the application process. To apply for financial aid, students will have to submit at least one or more applications. Every student applying for financial aid will have to submit the FAFSA. The FAFSA is the free application for federal student aid. It is always 100% of the time free. Students should never have to pay any type of fee to submit the FAFSA. This is an online application. It's required by every college and university in the country. It already became available on October 1st, so high school seniors are able already to complete the FAFSA for college for next year. That website is FAFSA.gov, and you can see on the screen what that homepage will look like. Always go to FAFSA.gov. That's that main website for the FAFSA. In order to complete the FAFSA, the student will need to log in with an FSA ID. And the FSA ID is simply a username and a password. Both the student and a parent will need to get an FSA ID. And you can go to fsaid.ed.gov, that URL listed on your screen, to get that. Basically, you'll need to log in to get an FSA ID with your social security number, your full name, your date of birth. You'll have to set up some security questions, and then you'll have yourself your FSA ID. When completing the FAFSA, there's a great tool that is available. It's called the IRS Data Retrieval Tool. And you actually don't even have to remember that long name. All you have to know is there's a tool within the FAFSA, so within this online application, that will allow you to pull in information from your 2015 federal tax return, as long as you've already filed that return. And since we're almost to the end of 2016, you have probably already done your 2015 tax return. The FAFSA is going to ask some questions about your 2015 federal income tax return. You can simply reference your 2015 tax return and type in the answers, but to make your life even easier, the FAFSA will prompt you and walk you through how to use this IRS data retrieval tool and basically go to the IRS website, pull in your 2015 tax return information. The FAFSA is going to walk you through how to do that, but just know that's a tool that's available to you. The FAFSA does need to be completed every year, so make sure you know that. It's not just this year, but every year the student's in school, you'll need to fill out this application. So what will you put on the FAFSA? To begin, the student will be asked about his or her citizenship status. The student will be asked the number of colleges and the specific colleges where he or she is applying. The FAFSA will allow you to list 10 colleges and universities. So when you go through the FAFSA, put the 10 schools that the student is applying to, or up to 10. If the student is only applying to 5 or 6, that's fine. You'll just list those schools. If the student is applying to more than 10 schools, that's fine too. You'll put 10 of the schools on the FAFSA. You'll complete the FAFSA. You'll submit it. And then you'll wait about 3 days. You'll get a confirmation email saying that your FAFSA has been processed. Once you get that email, you can log back into the FAFSA, delete your 10 schools, and then add any additional schools to which the student is applying. The FAFSA will ask about information on the student who's applying for school, and then the parents. On the FAFSA, when asking questions about the parents, if you're in a family where the parents are married, and this includes same-sex parents, both parents will report information on the FAFSA. If you have a family where the parents aren't married, they've never been married, but they do live together as essentially a married couple, they will both put information on the FAFSA. If you have a family with divorced or separated parents, the family, you as a family, needs to figure out the custodial parent. And this is defined as the parent with whom the student has lived the most over the past 12 months. That parent will put information on the FAFSA. If that parent is remarried, that new spouse will put information on the FAFSA. The other parent, called the non-custodial parent, will not appear on the FAFSA at all. So as an example, if I'm a student and my parents are divorced and I live mostly with my mom, but I do see my dad every weekend, let's say, because I live with my mom the most, my mom will be on the FAFSA. If my mom is remarried, say for example to my stepdad, My stepdad will also put his information on the FAFSA. Even if they just got married last year, it'll still be my mom and my stepdad's information with my information on the FAFSA. My non-custodial parent, my biological dad, even though I see him all the time, he's in my life, he is nowhere on the FAFSA. If the custodial parent and the non-custodial parent, if both parents basically live with the student half the year, maybe as a student I live with my mom half the year and my dad half the year, I'm supposed to select as the custodial parent the parent who pays the most for my finances, who pays the most for my living expenses. If that is still pretty even, then I just need to select a parent as the custodial parent and a parent as the non-custodial parent. So it's up to your family to decide the custodial parent and then the non-custodial parent. On the FAFSA, the student and the parents will need to report their income. And for this FAFSA, if you have a high school senior who's going to college next year, you'll be completing the 2017-18 FAFSA because you're filling out the year during which the student will be in school. You'll need 15 income information. We had a question from someone saying, well, what happens if my income is very different? It fluctuates from year to year. You'll still report your 2015 income information on the FAFSA, but that's a good opportunity to be in touch with the financial aid office at every college and university and let them know that your 2016 income is much lower, for example, or there's been a lot of fluctuation. And in that case, the college will be in touch. They might want to see your estimate for your 2016 income. They might decide to use that instead of 2015 to determine your financial aid award, but you need to be in touch with the financial aid office if you think your 2016 income is very, very different. That's something you can communicate to them. We also had a question asking about if a family has a 401k withdrawal or unemployment, some type of income that's a little bit different. Maybe you don't have every year, but for one reason or another in 2015 you had a bump in your income because one parent received extra unemployment, or you took money out of your 401k and that bumped up your income. Maybe you hit the lottery, maybe you had an inheritance. Again, anything that is different in your 2015 income that doesn't usually happen to your family from every other year, that's something you just want to communicate with the financial aid office. Send them a letter, send them any kind of documentation that would help explain what you're trying to explain to them about your income, and then they will make the determination how to change their analysis of your financial aid to determine how much to give you. Also on the FAFSA, you'll need to report assets. And by assets, we mean any amount of money sitting in a savings account, a checking account, any investment, stocks, bonds, any additional property, maybe a vacation home or a rental property. When reporting your assets, your investments, you will not include on the FAFSA the value of your primary home, the value of any retirement account, your life insurance, and the value of any small family business. And family business is basically defined as any business owned more than 50% by your family that has less than 100 employees. You'll report the income from that business, but not the actual value. And then finally on the FAFSA, you'll report the number of people who live in your household and the number of children going to college in the 2017-18 year. This does affect your financial aid eligibility pretty significantly if you have more than one child in college. So let's say you have a child in college right now, and maybe you didn't qualify for financial aid, but then next year you'll be sending 2 children to college. You could then become eligible for financial aid. Colleges and universities recognize that it is a big expense for a family to send 2 children to college. So they definitely take that into consideration when determining your eligibility for financial aid. And if you have more than one child going to college, you will be eligible for more financial aid. In addition to the FAFSA, some colleges require other financial aid applications. And one that you might have heard of is the CSS Financial Aid Profile. It's required by about 400 colleges, universities, and even scholarship agencies across the country. While the FAFSA is always free, the profile does have a cost. It's $25 to submit it to your first school, and then $16 to submit it to each additional school that requires it. The profile is online, and you can see the URL at student.collegeboard.org/profile. The profile asks a lot of same questions required by the FAFSA, but it asks for more details, and that's basically why some colleges and universities use the profile. It gives a lot more information to colleges and universities. There's more questions. The questions are in more detail, and colleges and universities that use the profile like this additional information. They feel that it gives them a better picture of a family's financial state. Like the FAFSA, the profile requires information from the custodial parent and the custodial parent's current spouse for those families that have divorced or separated parents. But a lot of schools requiring this profile also require what's called the non-custodial parent profile. And as it sounds, this is an application required by the non-custodial parent. So if you have a divorced or separated family, the custodial parent will fill out the profile, and the non-custodial parent will fill out the non-custodial parent profile. We have a webinar on MEFA.org. If you'd like to receive a lot of in-depth information about the profile, you can either watch a recording of that webinar or you can register for an upcoming webinar. We've already done one, so you can watch that one, or you can sign up for an upcoming one to watch it live. And then finally, some colleges and universities require a separate financial aid application. They put that on their website, and it's usually an online application. So what's very important for your family to do is to go to the financial aid office at every college and university, go to the financial aid office website and find out the required applications. Every college requires the FAFSA, so you'll send the FAFSA to every college and university, but you'll also likely need to fill out some additional applications for some schools and send those. Financial aid deadlines are so important. If you take nothing else away from this webinar, know that you need to submit your financial aid applications on time. So make sure you know the applications that are required and the deadlines, because you want to make sure to get those applications in on time. For those of you that are applying early decision or early action, you will likely have early financial aid deadlines. Some of those might be as early as November 1st. So make sure that you know those deadlines and you submit those applications on time. After you apply for financial aid, the colleges and your state will receive your financial aid data electronically. The student will receive the student aid report, which is basically a summary of the information on the FAFSA, and the profile acknowledgement if you filled out the profile, which is basically a summary of your profile information. If you do have any special circumstances, as I mentioned, if your income is fluctuating, if anything else is different, if you had to deplete your bank account recently, if you had to take more people into your household, maybe grandparents started living with you, you can mention that to the financial aid office. Simply send them a letter or an email or a fax. Someone asked about private school tuition. There are some colleges and universities that do consider that. If you're paying private school tuition for high school or elementary school for your children, so you can mention that in a letter as well to the financial aid office. After you submit your financial aid applications, you might be selected for a process called verification. Is federally mandated, and it requires millions across the country to submit additional documents to the financial aid office. You'll be alerted by the financial aid office either by an email or a letter if you're selected for this process and what you need to do. So it's very important that you check your email, that the student checks his or her email, that you open your mail, because you might receive a request to submit additional documentation. For example, a tax return transcript or a copy of your latest bank statement. Your financial aid application will be incomplete until you submit these requested documents. So you definitely want to make sure you submit those as soon as possible. And then finally, colleges will take all of your information and determine your financial aid award. So let's talk about how those financial aid decisions are made. First, it's important to know some common terms. The first is cost of attendance, and this is the total expenses for a standard student for 1 year of college. Every college and university has a different cost of attendance because, of course, colleges and universities have very different prices. The cost of attendance is going to include the billed expenses that a standard student has: tuition, fees, room, meal plan, but it also includes estimates for what a standard student would spend when attending college, including books and materials that have to be purchased, personal items like a toothbrush, travel to and from campus, and then travel on campus as well. So again, every college and university has a cost of attendance. You can look that up on each college and university website to find out. But that cost of attendance is what colleges and universities will use in the financial aid process. Another big term in the financial aid process is expected family contribution. And the expected family contribution is basically a calculation. It is a number that's calculated based on one standard formula and all of the information that you've put on those financial aid applications. Your expected family contribution, or EFC as we call it, is supposed to represent how much your family can pay for 1 year of college. Your EFC is going to be about the same at every school because it doesn't change how much you can pay, but of course the cost at every school will be different. Again, all of that information from your financial aid applications is put into one standard formula to determine your EFC. Some colleges use two formulas. They use this one standard formula that's actually set by Congress that every college uses to give out federal and state money. And then some colleges use a separate formula, what we call the institutional formula, to calculate the EFC based on the information that you've put on the CSS financial aid profile. So those schools that are requiring that extra financial aid application, that CSS profile that I talked about, they will put your information from the profile into this separate formula, and they'll get your institutional EFC. They'll use your federal EFC number from the federal calculation to award your federal and state financial aid, and then they'll use the institutional EFC from the institutional formula and your profile information to award the financial aid coming directly from that college or university. The main message with the EFC is that though you will hopefully receive substantial and significant financial aid to help you pay for college, it really comes down to the family as far as the primary responsibility. If you are sending a child to college, you are making an investment. It's unfortunately not a right of everyone to be able to pay for college, at least not yet in this country. So you are making an investment just like if you decided to invest in a new home or a new car. This is an investment that your family is taking on and that you will have to pay for. The EFC, again, is just a calculated number. It's not usually what your family will end up paying for school. That number comes down to the college cost, taking into consideration any financial aid you've received. But this EFC is what colleges will use to determine your financial aid eligibility. There are a couple of calculators online. The College Board has a calculator, and FAFSA, right on FAFSA.gov, there's a calculator called FAFSA Forecaster. These are EFC calculators. You can put in some information. You just have to answer a few questions about parent income and assets, and you can get an idea of your EFC. Now, when you do the FAFSA, on your last page, on your confirmation page, you'll also get your EFC. It'll be calculated automatically. But if you're not ready to do the FAFSA yet and you just want an idea of what your EFC would be, you can use one of the calculators mentioned here. Wanted to mention one other tool on college and university websites called net price calculators. There is a net price calculator on every college and university website. It's basically similar to an EFC calculator. There will be some questions about your family income, how many people live in your household. This is an anonymous calculator. You don't put in any personal or identifying information. But the calculator will then give you a personal estimate of what the student would potentially receive in financial aid at that school based on the information you put into that calculator. Again, this is just an estimate. You cannot print off this result and hand it to the financial aid office and tell them that this net price calculator told you would be getting a certain amount of financial aid. But it should give you an idea of the amount of financial aid that the student would receive at that college or university. And that's going to include the federal financial aid and the institutional financial aid. Students might also be given an idea if they would receive a merit scholarship, merit-based aid, and that's basically because some of these calculators ask for the student's grade point average and SAT score, and it as a result can give an idea if a student would be basically in the range to receive a merit scholarship at that school. This is the main formula that colleges use to determine financial aid. They will take the cost of attendance at their school, they'll subtract your family's expected family contribution, that calculated number, and the resulting difference is the financial aid eligibility, how much you are eligible to receive in financial aid. This will be different for every student, and colleges will then try to fill in your financial aid eligibility with financial aid. So they're going to try to give you as much as you're eligible to receive. A lot of the time you won't receive your full amount of financial aid eligibility, and that's simply because colleges do not have enough money to go around. But they try to give you as much as they can. Here's an example of how the EFC calculation actually works. As an example, we have 3 different families here. Every family has 4 people in the family. We'll say 2 parents and 2 children, and only 1 child is going to college, and then we have a younger sibling. You can see when looking at these families in that first row, combined parent income, every family has the same combined parent income. For simplicity, we'll just say it's $75,000. But the amount of assets that each family has is very different. Family A has no assets, no savings, no checking account, no stocks, no bonds, nothing. When putting Family A's information into that EFC calculator, Family A is given an EFC of $7,925. So based on that formula that will be used for students going to college next year, Family A will be expected to pay for college almost $8,000. Family B has the same amount of combined parent income, but Family B has combined parent assets of $75,000, meaning that Family B has some type of bank account, a savings account, a checking account, maybe a college savings plan of $75,000. The EFC, what is expected of Family B for college, has increased. It went up to $10,963, but not that significantly of an increase, only about $3,000 more than Family A. So even though Family B has $75,000 more dollars sitting in a bank account, they're only expected to pay for college about $3,000 more dollars, and that's simply because the EFC calculation protects assets, protects your savings. They want families to save. So they are expecting that you'll keep your savings and your checking and your stocks and your bonds for other expenses. A small amount of that will go to college, but most of it will be used for other things. Family C, you can see, has the same amount of income. They have assets of $150,000, very significant. Their EFC went up to $15,193. So the EFC did increase, but still not that significantly considering the large amount of parent assets. Let's look at another example showing how income impacts the EFC. Again, we have 3 different families. Everyone has 4 people in the family, 2 parents and 2 children, and 1 child going to college. In this example, every family has the same amount of assets. You can see on that first pink line, everyone has $50,000, let's say, sitting in a savings account in the bank. But the combined parent income is very different from family to family. Family A has $75,000 of combined parent income. With assets of $50,000, the EFC for family A is $9,553. Family B, again, the same amount of assets, has combined parent income of $100,000. Their EFC has gone up to $18,126, so it's almost double. As family income and parent income increases, the EFC is going to increase, and it's going to increase at an even larger percentage as income increases. And then you can see family C has combined parent income of $150,000, combined parent assets of, again, $50,000, and family C's EFC is $33,962. Now that seems very large. This is a family that just makes a combined total of $150,000, and they're expected to pay for school almost $34,000. That does seem a little unrealistic, and a lot of the time a family will see their EFC and be appalled at how high it is. Remember, this is simply a calculation, and the best thing for you to do if you haven't filled out those financial aid applications is to go on those EFC calculators and just see what your EFC would be as a family, because it might be very different than what you're assuming based on your circumstances. Here's another example of how that financial aid formula works. We have 4 colleges here, each college represented by a bar. The full height of each bar showcases the full cost of attendance at each school. So College A, with the highest bar, has the highest cost of attendance at $60,000. Then on down the line, College B at about $40,000, College C at about $25,000, and then College D at $5,000. I'm a student applying to all 4 of these schools. As an example, let's say my EFC is $5,000. Again, my EFC is going to be the same at every school because my circumstances haven't changed. My parents' income, my income, our assets, they haven't changed. So my EFC will be the same at every school. But the difference between the cost of attendance, the full height of that bar, and my family's EFC is my financial aid eligibility. And that changes from school to school. The more expensive the school, the higher my eligibility for financial aid. So you can see at College A, there's a lot of green there. That's how much financial aid I'm eligible to receive. All the way down to College D, where because the cost of the college is $5,000 and my EFC is $5,000, I'm not eligible for any financial aid. Though at College A, I'm eligible for basically $55,000 in financial aid, my cost minus my EFC, it doesn't mean I'll receive that much money. It just means I'm eligible for it. And that's something really important to understand in the financial aid process. You might be eligible for a lot of financial aid, but because the college doesn't have enough money to go around, or they had a lot of applicants, or they're giving money to other students that they've prioritized, you might not receive the full amount of financial aid that you're eligible to receive. This is another illustration to show how colleges and universities award financial aid. If I'm a financial aid administrator and I'm working at a college that costs $40,000 and I am awarding financial aid to a student with an EFC of $5,000, I can think of it as a barrel. The barrel represents the full cost of attendance at my school, $40,000. First, I'm going to feed into the barrel what the family has to pay. I've calculated the family can pay $5,000. That's the family's EFC. The rest of the barrel represents the student's financial aid eligibility. So I try to fill in that financial aid eligibility, fill in that barrel with financial aid. So I give this student a scholarship of $9,500, a grant of $13,500, a student loan of $5,500, a work study award of $3,500. So I've almost reached the top of the barrel, almost, but I didn't quite have enough financial aid to give it to this student. So there's some room left, and we call that unmet need. If there's some room left in the financial aid eligibility that I can't fill in as the financial aid administrator, then there's some unmet need, and that falls on the shoulders of the family. So this family will have to put forth $5,000 for their EFC, but then they also have to come up with the unmet need because I didn't fill in all the financial aid eligibility. So there's some costs left that are not covered by financial aid that the family will have to pay for. Wanted to show a couple examples of financial aid award letters, which you'll start receiving after you submit those financial aid applications. Let's say, for an example, I'm a student. I've applied to 3 colleges, and for simplicity's sake, we'll say they all cost the same. They're all $40,000. My family's EFC is $5,000, so my total eligibility for financial aid at every school, at all 3 of these schools, is $35,000. At College A, if you look down the first column, you can see that I got a grant or scholarship of $26,000, student loans of $5,500, work study of $3,500. So my total financial aid at College A is everything I'm actually eligible to receive, $35,000. Great news. College B, I got a little bit less. My grant and scholarship was a little bit smaller. It was only $23,000, but I still got $32,000 at College B. There's some unmet need of $3,000. But I got a lot of financial aid still. College C, I got much less financial aid. Maybe I filled in those financial aid applications late. Maybe College C just had a lot of applicants and they weren't able to give me as much financial aid. I was given $18,000 in a grant or scholarship, still student loans and work study. But my total there was only $27,000, so there's some unmet need. So at college, I'd still have to pay my $5,000 EFC, but also cover that unmet need of $8,000. And here's another example of financial aid award letters. Same scenario, 3 colleges. My eligibility at each college is $35,000. And if you look at the dark orange line toward the bottom where it says total, you can see that each college gave me a total amount of financial aid of $32,000. If I just looked at that total from every school, I would just assume that I got the same amount of money from every school, and then I would just pick my favorite school. But I need to look at the details. If you look at that third line down, that third row, you can see something that says parent loan. There are some colleges and universities that include in their financial aid award letter a parent loan. This is merely a suggestion from the financial aid office, a suggestion that my parent could apply for a loan. If a parent loan appears on a financial aid award letter, it does not mean that that parent has applied for that loan or even been approved for that loan. It is merely a suggestion. If you look at College C, the last column, I, the student, was given no grants and scholarships, simply a student loan and a parent loan, and that total came to $32,000. So I really wasn't given any free money at College C, just loans, but my total looks the same as it looks at College A. So it's very important to look at those details on the financial aid award letters when they come to you. So just an example of how your family will actually pay for college. Once you determine how much financial aid you've received and you determine the cost of the college, the difference is what your family will have to pay for that year in school. As an example, let's say my family has to pay $20,000. I've selected a college, I've subtracted my financial aid, and the resulting difference is $20,000. Financial aid officers will often suggest that families use past income, present income, and future income to pay for college. By past income, they mean use some of your savings. So in this example, perhaps this student is able to pay $1,500 from savings and summer earnings, and parents are able to pull $4,000 from their savings account to pay. Then perhaps parents to a payment plan. Most colleges and universities do have a payment plan. It allows families to pay the cost of college over several months. So perhaps I've enrolled in a 10-month payment plan. As a family, I can pay $450 a month, and that comes to $4,500 total. That will chip away at my balance due. And then perhaps I decide to take a private loan. There are some families that in addition to that federal student loan that the student has taken, do decide to take a private loan from a private lender or private bank. And that's an option that some families do take in order to pay that balance due. Just a word on those federal direct student loans. Any student that completes the FAFSA will receive a federal direct student loan. Doesn't matter the student's financial status. Everybody gets one. On these loans, the student is the only borrower. There is no credit check because students really don't have a credit history in most cases. There are both subsidized and unsubsidized federal direct student loans. And the only difference is that subsidized loans don't accrue interest while the student's in college, and unsubsidized loans do. You don't have to pay the interest on the unsubsidized loans till after graduation, but they are accruing interest. There are annual limits. So for example, freshmen receive at most $5,500 in these loans. Sophomores receive $6,500, and juniors and seniors each receive $7,500 as their maximum. There's a fixed interest rate on these loans every year, and those are set for the life of the loan. So anyone in college right now that's taking a loan has a fixed interest rate on that loan of 3.76%. That will stay for the life of those loans. Next year, when students go to school again, any student in college next year in 2017-18 will have a new fixed interest rate for those loans that will be set for the life of those loans. The year after that, new loans, new interest rates. The great thing about federal direct student loans is that they have different repayment options. Students don't have to repay anything while they're in school, and then once they graduate, they can work with the federal government to select many different repayment options. A lot of them are based on the student's income. So if a student graduates and doesn't have a job right away, or volunteers for a year, or has a very low salary, they can adjust their payment amount based on their salary, their income. Students that take the maximum of their federal direct student loans each year, so $5,500 freshman year, $6,500 sophomore year, and then $7,500 junior and senior year, will graduate with $27,000 in debt. That's a chunk of change, but definitely doable in regards to repayment. Students have as a standard repayment 10 years to repay, and with that amount of debt, students would repay about $300 a month. With these loans, there are deferment, forbearance, forgiveness opportunities. There are a lot of options. And if you go to that website I mentioned at the beginning of the presentation, studentaid.gov, you can find out more about these opportunities. Finally, to conclude, wanted to pass along some free resources. There's a great event across the country called College Goal Sunday, and it's run by the states. So in order to find your state's College Goal Sunday, you'll just have to do a quick internet search for College Goal Sunday and then your state's name. These are events where you can show up as a parent, as a student, together, either one, and get free help completing the FAFSA. You'll sit usually in a computer lab with volunteers from financial aid offices and go through the FAFSA together. If you just have a few FAFSA questions, you can also show up and just ask a few questions. There's also a new campaign coming from First Lady Michelle Obama called Up Next. It's part of her Better Make Room campaign. Parents, students, and counselors can all text the word college to 44044. That's in reference to Obama being the 44th president. And as a result, whoever texts this will receive free tips on all stages of college planning. So would encourage you, students, counselors, to use this tool. You'll get great reminders on planning and paying for college. A few things you can do now. Again, MEFA.org. You can sign up for emails if you want just free college planning tips. Be sure to get that FSA ID, as I mentioned, basically the username and the password for both the student and a parent who will be on the FAFSA to sign electronically that FAFSA. Make sure to research the deadlines and required applications for every college and university where the student is applying. And then do start completing those financial aid applications, especially if you have a deadline coming up. We have a lot of webinars, as I mentioned, on MEFA.org, so you can go to our events page, all about paying for college, planning for college. Would definitely welcome you to attend any of these webinars. They're, of course, all free for families. And then again, my name's Meredith Barnhart. I work at MEFA. That's my direct email address and direct line that you see, mbarnhart@mefa.org, and then 617-224-4863. You're welcome to contact me at any point with questions about this webinar or anything else about college planning. You can also reach out to my organization, MEFA. We have an email address and an 800 number for you as well. And that basically concludes the webinar. If you have any questions, feel free to type them in, and Meredith and Linda will go ahead and facilitate those. Happy to answer any questions. If you have to jump off, feel free to contact me at a later time as well.
Awesome. Thank you, Meredith.
Hi, Meredith. There are two questions. One that came up was, is the CSS in addition to the filing of the FAFSA application?
Yes.
Ooh, you're breaking up a little bit.
College or university that requires the CSS profile also requires
There's a delay.
Yeah. Can you start your answer over? We didn't get that.
To submit a FAFSA to that school.
Meredith, can you repeat your answer? That it was super choppy.
Sure. Any
Thanks.
college that requires the so any college or university that requires the profile also requires the FAFSA. So if you are doing a profile for a college or university, you will definitely also have to send the FAFSA to that school.
Great, thank you.
Sure. So our next question is, how soon will we receive the SAR report once the FAFSA has been submitted?
You should receive the student aid report within 3 to 5 days. So that should come to you pretty quickly. If you put an email address on your FAFSA, you'll receive that in the email inbox that you listed.
Great. Another question is, a person's daughter is applying early admission to MIT. The required documents for aid have to be in by November 30th. The CSS profile application for MIT says that early filing is February 15th. Is that correct?
You would definitely need to contact the school with the deadline. So if you see 2 deadlines listed, the earlier deadline is what you want to aim for. And if you're ever unclear, if you see 2 different dates, call that school's financial aid office to find out.
Great, thank you. And so our next question is there a way to waive the CSS profile fee? And if there is a way, how would you go about doing that?
There are fee waivers for the CSS profile. They're automatically calculated. So you'll be told after completing the profile before you're asked to pay if you do qualify for a fee waiver. And it's based on basically your financial status, mostly your income. If you don't qualify for a fee waiver, some college access organizations and some colleges and universities do have fee payment codes that you can put in, which would pay for your profile submission. But if you don't have a fee waiver and you don't have a fee payment code, you will have to pay to submit the profile.
Okay, great, thank you. How much change in income in 2016 should I call the financial officer to report? And should I wait until the acceptance letter is received?
I would not wait until the acceptance letter is received. If you have any significant change from 2015 to 2016, I would mention it. And I guess a significant change would be anything above and beyond a simple cost of living increase. If both parents received a simple 3 to 5% raise in their income, that's pretty standard. But if one parent lost a job or one parent had a large reduction in a salary, anything that seems significant over a few $1,000s, I would mention that to the financial aid office and go ahead and contact them now. Even if you don't know if the student is accepted, go ahead and send in that information.
Thank you.
And we had another question about, on the CSS form, it asked how much the family will be able to contribute to the fee, and how would you be able to determine that?
That's really up to your family. That's just an estimate, and it does ask how much do you plan to pay for college. Just give your best guess. If you kind of have in your mind what you think your family will be able to pay, whether it be $5,000, $10,000, $1,000, simply put that on the form. The schools are just trying to get an idea of how families have planned and what they think they'll be able to pay for college.
Awesome. And so if you've already have one student in college and have filled out the FAFSA and CSS profile for 2015, would you be able to use that again, or do you have to fill out all the forms again every year?
Yep, you have to do them every year. And if you've done a FAFSA for one child, when you go in to do a renewal FAFSA for the next year, some of your information, basically your address, your identifying information, will copy over, but you'll have to do a new form every year. As well, if you have 2 children in college, you'll do the FAFSA for one child, and you'll have to do another FAFSA for the second child. However, when you finish your first FAFSA, there is an option on the last page to copy over parent information into your second FAFSA. That'll save you a little bit of time. You'll find that on the confirmation page once you do your first FAFSA.
Thank you. I know we talked about this earlier. Can you shed any light on the changes in the date of the FAFSA coming out and how that affects applying early action or early decision?
Yep, so in the past, the FAFSA wasn't available till January 1st, and this is the first year where it opened early on October 1st. And how that affects early action and early decision is really going to change from school to school. Some schools in the past, in their early action and early decision process, required the CSS profile because that has always opened early, and did not require the FAFSA until later on. Some of those schools are now requiring both the FAFSA and the profile to be submitted early, sometime usually in November, for those early decision and early action candidates. So really what you need to do is just go to the financial aid website of every college and university and find out those deadlines for early action and early decision and what applications are required.
Thank you. We do have another question. Is there any possible way to graduate without debt? Could scholarships cover this realistically?
There are definite ways, and it never seems that way when you're looking at the news. There are different programs throughout the country that help students get through community college for 2 years and then transfer easily into a bachelor's degree program. This is one option to get through 4 years of college in a less expensive way than going to a 4-year school initially. And there are programs, and you can just seek out the programs in your home state, where community colleges and 4-year state colleges, in most cases public colleges, are working together so that students can get through 4 years without taking on too much debt. Even if you don't go the community college route, there's different ways to do it. There's, of course, financial aid that we just talked about. There are other options, working throughout the summer, and then, of course, RA, resident assistantship, resident directorships, which help students actually pay for their room and their board while they act as a resident director or advisor on hallways. Some students do go to college for a couple years, then stop to work for more years to save money to pay for school, and then go back to finish their degree. So there are a lot of non-traditional ways to get through. Some students opt to go part-time for college and then work full-time or part-time all through getting their degree. The best thing to do, of course, is just to explore all your options. Apply for all of the financial aid. Make sure you're on time. Apply for all of the scholarships that you can find. And then it's always a good idea to talk to the financial aid office. They might have ideas of what other students have done to try to get through school without taking on debt.
That's great, thank you. Those are great suggestions. I think that's all the questions that we have so far.
Yeah, does anybody else have any? Sure. So we do have one more question, and it's, do you recommend to use up all 529 college fund on one child? My next child will attend college in 6 years.
That's a good question. We get that question a lot, and it's really up to your family. What's helpful to think about is if your income will be any different when the younger child goes to college. Sometimes parents know that their income will be lower in the future, so they opt to save all the 529 funds for the younger child because income will be less at that point. Some families know their income will probably be the same, so they opt to split the 529 funds in half, giving half to one child and half to the other. Some opt to use all the 529 funds up front, trying to delay perhaps extra borrowing or taking on extra debt. Maybe you can save yourself from taking on debt to the younger child so that you're not accruing so much interest as you go. So those are just some things to think about. Really look to the future when that younger child is going to college and what your financial state will be at that point, and that can help you make your decision.
Great. Meredith, I want to thank you so much. This has been really informative. I think you've gotten a lot of questions, and I think you've provided a lot of great information for our families and students. I want to thank the families and students for joining us tonight. It was really nice seeing all your names up there, and I hope that your semester goes well. Please reach out to us if you have any more questions, and as you can see, Meredith has put her information there to answer questions that may come up later. And again, you can also look on our website and print out the slides or view the webinar again if you would like to share it and see it a second time. So thank you so much for joining us, and we will see you again soon for our next webinar, and we will let you know when that is. And thank you again.